Assalamualaikum warahmatullahi wabarakatuh.
My name is Almalianur.
My name is Yara Herunisa,
I will explain about balance sheet.
and I will explain about cash flows.
So, balance sheet or a statement of financial position is a part of entity's financial statement produced in an accounting period that show the entity financial position at the end of that period. The balance sheet consists of three elements, namely assets, liabilities, and equity. Components or contents contained in an asset are divided into three parts, namely current asset, fixed asset, and other asset. Then the obligation or debt is divided into two types, namely current liabilities and long-term debt. The capital component consists of deposit capital, retained earnings. The position of asset on the balance sheet is present on the right side sequentially from top to bottom for balance sheet in the form of accounts. The right side consists of asset and the left side consists of liabilities and equity. As for the balance sheet in the report from the preparation start from the top in sequence to the bottom, starting from asset, liabilities, and equity. Balance sheet preparation start from the most liquid, which start from current asset, fixed asset, and other assets. The components contained in current asset are cash, bank, securities, account receivable, inventory, and others. Then fixed assets are divided into tangible and intangible fixed assets. Components in tangible fixed assets such as land, buildings, machinery, vehicle, equipment, and other, while in intangible assets such as patents, goodwill, option, and others. And the lowest position is filled by other assets, meaning that they are not classified as current asset or fixed asset. For example, building in the process long-term deposits and other on the left side, the balance sheet. It contains the company liabilities and capital obligation for balance sheet are in the form account. The components start from short-term liabilities, meaning debt that has a period of no meaning debt that has a period of no more than 1 year, such as trade debt, notes payable, and bank debt. Furthermore, under short-term debt is long-term debt. Long-term debt is debt that has a period of more than 1 year, such as banks, mortgage, or bank debt with a period of more than 1 year. The last position on the left side of the balance sheet is company capital or equity. Components of capital consist of, among others, deposit capital, retained earnings, profits reserve, grants, or other.
Okay guys, I will explain to you about cash flows. A cash flow report is a part of company's financial statement produced in an accounting period that shows that inflow and outflow of money of the company. Classification of cash flow statement in the financial statement of cash flows, but in goods and service companies, there are three parts. First, cash operating activities. Example of cash operating activities are payments and income from accounts receivable, salary payments, operational expense, and so on. Cash reports from operating activities consist of main activities or operation in a company which directly impact on cash. Secondly, cash investment activities is a financial cash report relating to the acquisition of sales and purchases of fixed assets or permanent assets. Third, cash funding activities. Financial statement of cash flows relate to owner investment, borrowing funds, and withdrawing money by the owner. Based on the way of presentation or its form, financial statement of cash flows are divided into two, namely direct method and indirect method. In terms of elements, there is no difference between the two ways of presenting cash flows financial statements. The difference only in the presentation of cash flows from operating activities. In general, there are 5 steps that can be used as a way of preparing cash flows financial statement. First, calculate the increase or decrease that occurs in case. Second, calculate and report net cash used in operating activities. Third, calculate and report net cash using investment activities. Fourth, calculate and report the net cash by funding activities. Fifth, calculate the flow and add net cash from the combined net cash used by operating, investing, funding activities with the initial balance of cash. The preparation of financial statements that are correct cash flows is useful for the future of the company in the future. This report is generally useful for the managers to assess past operation, to plan future investment and financing activities. Large companies with very large net income do not guarantee that the company has enough cash to pay employee salaries and buy the company's next equipment. Benefit of a cash flow statement. Financial statement of a cash flows have various benefits from companies of goods and services. Apart from being beneficial to the company, this report is also useful for many parties who need information from the report, such as investors, creditors, and others.